The insurance product can probably cover a third of the things that could potentially put you out of business. There's 2/3 that will wreck you much quicker than a claim or a windstorm or a fire or a big auto loss and put you out of business.
I tell clients, look, if you want to work with contractors and all you want to do is get an opportunity to talk to them, ask them about certificates and audit. Those are the two places they're going to get pissed the quickest. They're either not getting their certs fast enough and getting paid, or the insurance company screwed them in an audit.
Risk management sounds great, but if this is somebody who is prepping to sell their business in the next 24 months, the risk management is not for them. I think many other agencies in my place were like pushing for the appointment. You get in there, pushing for the information, throw it back at the agency, see what they can figure out, and whenever they had something that could potentially sell, get in front and try to throw everything at it, all the kitchen pans, and say why this is a better deal.
If you are just consistent in producing content, your audience will always find you regardless, always.
My first 5 years were drastically uneventful. I was hitting myself against a wall many times. I was making 100 to 125 calls a day to set appointments.
If you're taking the same account out to market year after year after year and you're hitting 10 or 15 carriers, 9 or 14 of them lose. Only one of them gets the business, and there's going to come a time where you're going to need one of those other markets, and they're not even going to be willing to crack the submission and look at it because they've seen it 10 years in a row. It got in decline.
It's our job as producers and as an agency to notify our clients as to what is coming down the pipeline for them.
If I were to go to any of the middle market companies that I would call on in the Tampa area, and I would poll them to explain to me how their wind deductible work, I would be willing to bet that at least 80% of them would think that it was a percentage of the loss, not a percentage of the total insurable value.
You may not have all the terminology, but a lot of these things almost sound like common sense. And you asking these very specific questions to the insured is very helpful.
One of the things that we do that's really elevated our game is a lot of my submissions on the more complex accounts at this point are done in video. What's up, everybody? Welcome to the Power Producers Podcast, where we are refining and redefining the sales game. And today I am joined by a fellow Floridian, Mr. Ryan Garzon from Keys coverage down in the other part of the state, not even remotely in my backyard. It's like a whole other world down there, honestly. There's people who think Florida's bad, and then the people in Florida think the tri-counties are bad. So it's like an island in and of itself. But as we all know, with adversity comes great opportunity. And I have a feeling you guys are doing just fine down in that part of the state. So what's up, Ryan? How you doing, man?
We're doing good. Just as I was hearing you give the intro, it started reminding me once driving down from Orlando to the Tri-County area for Palm Beach, Broward, and Miami. You can tell you're getting closer as you start to see cars cut you off on the road.
Well, honestly, man, depending on which way you go when you start seeing life again. I mean, I don't think the average person understands how much of the middle part, like that fat part of the Florida Peninsula, is still very much undeveloped. I mean, you've got the Everglades, you've got U.S. Sugar, Lake Okeechobee's there. And I mean, I used to write a fair amount of business in Okeechobee way back when. I had a program for feed manufacturing, and I went down and worked all the feed mills that were down in that area. And just even driving through Sebring and all of that, leaving Tampa, it blew me away. I didn't realize how unpopulated a lot of the state still was.
Yeah. I think that's changing fast. Florida's a big state, but there's people moving into every nook and cranny. That's for sure.
Yeah, 100%. Well, the fact we don't have state income tax doesn't hurt any. So, hey, real quick, man. Yeah, no kidding. You and me both. So real quick, before we get ramped up, why don't you give everybody kind of like the quick and dirty backstory of who you are and how you got in the industry and all of that, and then we'll take off and run with it.
The quick story is I'm originally from New York, went to Binghamton University for college, wanted to make it somewhere outside of the New York City area. And so I had a connection down here. So I came down here and I told my parents to give me 6 months and see if I could find something to make a living, or else I'd be back home. And probably right around the 6-month mark, I found insurance, and I pull up to an office and I see all these type of nice fancy cars parked up front and parked in the back. And I see a 7 Series. I saw a nice red Ferrari, and I walk in and I met with who became my mentor, one of the owners at the time. And when I met with him, I saw the fancy $50,000 watch on, and I said, "Listen, if what you guys are doing is not illegal, I want in. But I'm green. I speak English. I speak Spanish, sort of. But if you can teach me, I'll learn, outproduce, and outperform everybody around me." So that was a commitment. And so I started here about a week later, and here we are 17 years later.
Oh, wow.
Uh, yeah,
You've been at it about as long as I have then.
yeah, pretty much. I had more hair then. I would smile more. My teeth were straighter. Probably had 3 or 4 inches off my waistline. Those were good
Yeah,
times.
well, I think I got in '04, so I may have a year on you, but I mean, after 10 years, I think they're all kind of the same at that point because you kind of hit your stride, along the way, and then your job shifts a little bit from going out and producing 100% yourself to learning how to delegate. At least in my role, it did, to go out and learn how to produce for other people and inspire other people in your organization to go do what you were successful at. And that can be a difficult transition depending. My background is I came out of retail, so I ran grocery stores and super targets. I was used to motivating the unmotivatable long before I ever got into the insurance industry. So I do think, that when we draw off of our experiences from our past, and you can sample the things you did well and learn from, that it makes it a little bit easier to make the transition, because jumping from producer to agency principal or agency leadership is not something a lot of people do gracefully, and it's also not something that a lot of people really want to do. I mean, there's days I think back and I'm like, what would happen if I just had my book and that's all I had to worry about? Now I've got a bunch of people's families relying on me to make sure that, I'm giving them a great opportunity and that they're doing the things they need to do. So, what's that 17 years look like? Because it's certainly not the same today as it was when you walked in.
By the way, I have a lot of appreciation for what you just said, because what was nice about the early days was I was really just concerned about my own pocket and making sure I can do what was enough for me to keep myself happy. And then as you grow and things start to change and you are privileged to have more responsibility, I realize you're not so much concerned about your own pocket so much as you are about all of the families that get fed through the business. So that resonates with me tremendously, and I think a lot of business owners feel the same way. And understanding that is really huge in being able to meet on the same level playing field as them.
Yeah, I think the
Um,
other thing too, you have to do it gracefully, man, because the people that you're leading don't always have a genuine appreciation for sacrifice that you make as the business owner in many cases, or some of the things that you've given up along the way. And that's not something that I put in people's face. That's not how you lead people by any stretch. The comment is, it's very difficult sometimes, especially, my wife. These people don't, they don't understand what you've given up. It doesn't matter. That's not why I do what I do. I understand that. But I think that it takes a different level of mental maturity that we get as we age. I mean, I don't even know that it's experience in the insurance industry as much as the fact I'm 50 years old now. I think I look at life through a much different lens than I did when I was in my early 30s. But it does take a little bit of a mental game to be able to make sure that, even though sometimes you feel like what you're doing for people isn't always appreciated on face value, and I wouldn't say that my team reflects this at all right now. Over time, it has happened. We have a really good operation at this point, but there's been times along the way where I've sacrificed to bring that extra producer on that I thought was going to make it, and they didn't put as much into it as what I put into them. And it's interesting to see how you change your perception over time.
yeah, so ultimately, what you're comment about, new producers and putting work into them. Ultimately, I do still believe that the market is going to choose how much of their success is going to come from it. And to answer your initial question about like what the pathway was through those 17 years, my first 5 years were drastically uneventful. I was hitting myself against a wall many times. I was making 100 to 125 calls a day to set appointments. I would spend 3 days out of the week going door to door in an area I was unfamiliar with because I just had moved down from New York. I was shut down tremendously, probably because I was young, probably because I was inexperienced, probably because I didn't dress too well. Um, and my first, I was doing it because it was a job and I was getting a few dollars, but I wasn't completely um, sold on being an insurance agent or being a salesperson. When I was shut down from pursuing accounts or getting to meetings or told to leave a building I walked into, it made me question whether I really was a salesman and what my true intentions were. And initially, my true intentions were to make a sale and to make a few bucks for myself. But when I saw other people around me being successful, I figured that, if I really wanted this to work out, I had to become who I'd want. I had to imagine myself choosing an insurance agent, and I had to imagine which type of insurance agent I want if I were a business owner. And I wasn't a business owner. And so this was out of pure imagination. So I would say to myself, okay, if I'm meeting with insurance agents, there's the guy that says, hey, we're an agency, we have all these services, blah, blah, blah. Then I have this guy been working for 30 years. And then I have one guy who's maybe in the middle and it's not from a big agency, but he comes in and what items am I looking for? And so I started to like role play in my head what I'd want to hear. I started role play in my head what I want them to do on my behalf for them. I started to role play what potential things I could come across. And I also started to better articulate ways I could show our value towards a client without using the terms that other agencies would. So in a nutshell, what I wanted out of an agent, if I were a business owner, was to know he was knowledgeable, to know that even if he wasn't knowledgeable, I can trust him and that he can very easily say, I don't know the answer to that. I'm going to find out, or be willing to do the work in order to find out. So not have like certain barriers, and then be someone that would take their commitment to me beyond what is typical plain vanilla commitment of an employee. I didn't want an employee agent. I wanted an agent who was going to be there for the long haul and had certain interests in doing business with me way beyond the 5, 10, 15, 20, or $30,000 commission. And so go for it.
No, go ahead, man.
And so I started by saying, you know what, if this is for me, great. If it isn't, it isn't. I'm going to do that. And so when I started meeting people, I started with being very brutally honest and say, hey, I don't know who you're with. I don't know what you're set up with. I am new. I'm a year into this, or I'm a year and a half into this. I don't know everything, but I feel I have a good team behind me, and there's a mentor who can do much better at this than probably anyone out there. I've seen him perform, and I'm asking you for the opportunity for me to gather the information so that we can perform on your behalf. And by perform could mean you have this much coverage and we'll give you this much for the same money, or it could be this is what your insurance coverage is, and we could do it for, not 10, 15, 20,000 less, but 50,000 less, $100,000 less. That could be really impactful. Or three, maybe your agent sees you as a number and he's not doing certain things that we can tweak, or maybe he hasn't looked at every line item. I want to look through your policies with a fine-tooth comb because it's an opportunity for me to learn, and it's an opportunity for me to really dissect what you're doing and why you're buying it. And that was tremendous for me, because I think many other agencies in my place were like pushing for the appointment. You get in there, pushing for the information, throw it back at the agency, see what they can figure out. And whenever they had something that could potentially sell, get in front and try to throw everything at it, all the kitchen pans, and say why this is a better deal. And sometimes when they give me the policies, I would just run through it. Okay, building this amount, this much. You have your deductible of 5%. So based on the billing limit, it's X. And I just started running through it, not being very experienced, and just using any little piece that I had gathered from the prior month or 2 months of working. And it just worked out tremendous for me. It
You know
really
what, though?
gained people's interest in providing the information so we could do our job.
But here's the thing, man. And I think that as we get older and more experienced, and I did a podcast with one of my best friends in the industry, Josh Gurley, that drops this Wednesday, called Getting Back to the Basics. And everything you just said worked because you were learning and you were learning to understand what it was that you were selling. And it made it a lot easier for you to explain things at a level that that business owner would understand. Whereas somebody with 15, 20 years experience, a lot of times comes in and they talk above the business owner's head. It blows my mind. I mean, sometimes getting a deal done is as simple as explaining to somebody how their wind deductible works because they don't understand it. Nobody's ever
Right.
explained it. I would be willing to bet you that if we were to go to the average middle market company, maybe not as much down your way since wind is an even bigger deal for you, but it still may be this way. But if I were to go to any of the middle market companies that I would call on in the Tampa area, and I would poll them to explain to me how their wind deductible worked, I would be willing to bet that at least 80% of them would think that it was a percentage of the loss, not a percentage of the total insurable values. And those little things are
Absolutely.
things that you just automatically skim over as you get more experienced. And that's why, for me, I want to go talk to the person that changes every year or every other year. I want to find that client that's been with the same person for 5 to 10 years because I know that that person is comfortable in the relationship. They've probably taken their eye off the ball a little bit. And I'm going to find the dusty corners when I go in and I meet with those people. And I find that a lot of the time, that's how it works. They don't understand the time element deductible. They don't understand their wind deductible. Ordinance and law is a big deal where we're at because you got a lot of older
Right.
construction that's already difficult to insure. And then you find out that they don't have enough ordinance and law coverage. And I mean, these are things that were basics. They were drilled into our head when we got our license, when we got our CIC. But I think that there's a phenomenon where once we get our license, once we get that designation, and I can't speak for everybody, but I see it a lot in our peer group, people just think they've made it at that point. There is no more investing in yourself. There's no more getting better at understanding coverage. Let me tell you something, man. I sat in a Rubel Institute for my CIC that a guy got up and talked for 8 hours on additional insured. The entire day was nothing but additional insured. To a lot of people, that might sound like an absolute nightmare, but I left knowing that I could drive wedges at the point of sale. I would never be able to drive if I would have actually taken it seriously and sat in there and listened. And yet I hear people saying, what's the quickest place online for me to get my continuing ed done, where all I have to do is take the test or whatever else? It blows my mind. We have to have 200 hours. And I'm sure this was the way it was when you were going through. We didn't get to do this stuff online, man. I sat in class from 8 to 5, Monday through Friday for 5 straight weeks. And the whole time, the instructor's scaring the living daylights out of you about how hard the test is going to be. And like 70% of the people don't pass it. Studied harder for my insurance license than I did any of my college coursework for my entire college career. Then I took it and I'm like, that wasn't so bad. But now that I've been in it, it's like, I'll tell you, it's funny because 3 or 4 years after I had been on the streets, I had a business owner come in and I froze because he asked me, he said, why do I need general liability anyhow? I couldn't give him a good answer to the question because I'm so used to all of the other, coverage extensions and all the things we're talking about. And his whole philosophy was, if I get sued, I'll just close down the business and open up another LLC. And I'm like, I can't help you, man. I can't help you if that's your philosophy. The reason you have it is for X, Y, Z, but probably for 10 or 15 seconds, I just froze because I'm like, this is the most basic question somebody could ask me. And here I am not even prepared for the basics.
No, listen, I'm of the opinion that we're always learning. There's the market is ever changing. Things are changing all the time. I learn every single day. I'm never above anything. But to your comment, you're absolutely right. As a performer, as a producer, the staff needs to be able to meet their potential clients where they're at. It might be a little business that needs to understand how their business, her building deductible works. It might be a big corporation that maybe not to the extent that he didn't want to buy the liability and he thought he could just close the entity, but it might be a corporation where they don't understand the threat to the business that it is to have the auto fleet under the same entity that is running his operation business. And he just may need someone to explain to him, who's not an attorney and not charging him 15 grand, to say, hey, this auto fleet is best to have on a separate registered LLC. Here's the reason why. It could still be on the same policy. It could still be covered under your same umbrella, and explain those intricacies. But all of that starts with, in my opinion, shutting up and listening and seeing where the insured is at and making a good judgment call as to what will potentially help them. What helps, it might be really simple to us, but what might help someone tremendously understanding a policy, somebody else may not need it or can find better ways to really protect themselves outside of the insurance product. I always let them know the insurance product can probably cover a third of the things that could potentially put you out of business. There's 2/3 that will wreck you much quicker than a claim or a windstorm or a fire or a big auto loss, and put you out of business more quicker than an insurance claim can do it, and an insurance policy can cover. And just
Yeah, I
going
agree.
through what those things are is a huge eye opener for many prospects.
Yeah, no, I agree with you, man. I mean, it's funny because I always talk about this, but most agents, when you go meet with somebody who's going to evaluate whether or not they want to hire you down the road, the agent always wants to get the deck pages and the exposure information so that they can understand what they need to do to try and put a submission together. I don't care about any of that. I'm not going to copy off of somebody else's homework, number one, but number two, I want to see the loss runs, man. Tell me what's really going on in your business. Tell me what's driving your rate. Your rate didn't just go up in most cases as a factor of market conditions. There's things that you either are doing or are not doing that are contributing to that. So if we can tell a better story, if we have the ability to really get our arms around what's going on in your operation and then put together a game plan on what we're going to do to implement processes and procedures to fix that over the next couple of years, you're going to get a lot more mileage out of an underwriter than just going in and answering yes or no on the Accord forms, providing loss runs without actually doing any kind of analysis or even a premium versus loss summary so that they understand what they're doing. But more importantly, they have confidence that you know what you're doing. One of the things that we do that's really elevated our game is a lot of my submissions on the more complex accounts at this point are done in video. So we'll give you the Accord forms and everything, but instead of me sitting down and typing a narrative, showing you video footage of everything that we walked into and saw. You got pallets blocking your fire door? There it is. I want you to see that. And then we're going to go back before we finish the submission, and we're going to take video of everything we've done to clean that stuff up so that the underwriter sees that we're actually involved in these accounts and not just giving them lip service when we go in. So, let me ask you this, man.
I'm
Go
really glad you
ahead.
share that, by the way, of the videos and the pictures, because now more than ever, I am taking pictures, as long as the insured approves, of what's going on, of their warehouse, inside, outside, because it really sheds a lot of light. When an underwriter can see it beyond an Accord form and a supplemental, it makes them understand what the exposure really is. And it really gets them interested in working on that submission and getting it done for everybody.
Well, in addition, it makes you look like a completely different animal than everybody else that's gone into that account too. The business owner or the decision maker is going to be like, nobody else is asked to do this. Like
I'm actually
Go
really
ahead.
let down that in today's age, where everybody has a cell phone in their pocket, what you do and what we do isn't more prevalent. It blows my mind how every insurance agent is not walking around talking to the client, but also snapping pictures of everything they see. Blows my
Yeah,
mind.
and I take it one step further, man. I got licensed to fly my drone. So now I get footage of the roof, I get footage of the air conditioning units. All of that stuff goes in. I think a CFO reacts when you say, hey, just real quick before I leave, you mind if I deploy my drone quick and get pictures of the rooftop and everything so I can make sure the underwriter is seeing exactly what the roof updates look like that you got done 2 years ago and all of that other stuff. But it amazes me because, again, this is what we should be doing. Like, I listen to people up north talk about writing personal lines. They have to go out and take pictures of houses. They do the agents are the ones that are doing the inspections for the insurance companies. I've always just taken that approach because I felt like I didn't want to get caught by surprise with a bad situation down the road if loss control from the carrier came out and they saw something that I didn't see because I never left the conference room to walk the manufacturing floor.
Yeah. Yeah, thank you. You just helped me out tremendously. I'm gonna steal that from you, but I'm gonna buy a damn drone. I've taken pictures of everything, but I did not once think about buying a drone, keeping it in the trunk of my car and say, hey, before we leave, I'm going to do this for you. Because I would just put myself in their seat and you just showed up and you're telling me you're going to do that and you get a good quote. Excuse my language, fuck the other agent.
Yeah.
I'm with this guy who's doing the right thing by me and sharing it versus somebody seeing an outdated picture through Google Maps or Google Earth that is not what is happening at the moment because I had a guy up there and we did stuff. Or have an agent who will come talk to me about it but won't physically put anything into action and get it done immediately, real time while I'm there.
Well, and I think the thing is, you've probably run into this on accounts that you've called on when you're competing against other people. But so many agents are out there, they're so worried about getting the insurance deal done. They're afraid to have the conversation about the things that aren't right in the operation. And you know what? I don't have a problem at this point. Now, I'm not going to tell you, Ryan, that earlier on in my career, if I'm sitting here staring 50,000 in commission in the face, if I know there are risk management issues, but I've got a rock solid quote, that I'm not just going to focus on the quote to get the deal done, knowing we would work the risk management in. But over the course of my career, that's changed quite a bit. And I lead with the operational issues because it's only going to help me get a better result on the underwriting side. And there are times where people don't want to hear it. You know, I've gone in and I've had meetings before, and you'll start talking through workers' comp claims, and you'll hear the people say, oh, that one was fraud. That one was fraud. And you're like, listen, not every workers' comp claim that you have has been fraud. You know, I've got 4 people here who have a laceration to their left hand. There may be something going on with the guarding on that equipment. Can we go take a look at the workstation? And then if you go look at the workstation and that's right, hey, do you have documented training files that show that these people were actually properly trained to run this piece of equipment? Or have you ever had an ergonomist come in to make sure that it's set at the right height and everything is the right way? Do you have people cross-trained to work different workstations so that they can rotate through over the course of the day and not get worn out on the same thing over and over again? And I mean,
Right.
I think about those things, and that's second nature at this point for me to walk in and have those conversations. It wasn't always that way, but I think that a lot of people listening to this podcast are still selling insurance and they're not going in and giving themselves enough credit for being professionals. You know, our industry complains all the time about we're not taken seriously like accountants and attorneys. We want to be trusted advisors, yet we act
Right,
like
but they
used
will
car
be taken
salesmen.
seriously if they do what you're doing.
Yeah, but we go in and we act like used car salesmen at the point of sale. Give me your information. I'm going to come give you a quote. It's going to have some of the stuff on there, but who knows what coverage I cut because I didn't put it all on the quote sheet. You know, those days are gone. That's why the people that were doing it right in the soft market are reaping the rewards in the hard market. There's a lot of people that are agents that are complaining about market conditions right now, and I think this is the greatest opportunity I've had in 20 years.
Yeah, right. But you've also learned to be a business owner where you take every situation and make it into an opportunity. So there's a lot of truth to that. But in everything you're saying, it resonates tremendously. I think someone listening in who maybe hasn't had all their credentials, hasn't done their CIC and things like that, what I would say to those people is you may not have all the terminology, but a lot of these things almost sound like common sense. And you asking these very specific questions to the insured is very helpful. And it helps in the sales process. Even you coming out to the insured and before you start the conversation, say, hey, there's a couple just broad ideas so I can operate on your behalf. Why are you buying the insurance? Are you buying the insurance to satisfy the banks and your loan covenants? Or are you buying this because you want the coverage for yourself? Like when you increase coverage, is it because you decided or because you have a contract that or a project that requires you to buy it? And understanding that is huge. And then, I always let them know the more they share with me, the more I can act on their behalf because I'm not going to stop every 5 seconds to call them and see if something's okay. The idea is for me to understand what their predisposition is, what their financial position is, and whether they're going to take a risk or keep some risk in-house or send some of the risk, outside. Something very important to also consider is I always ask them what their intention is with the business. Risk management sounds great, but if this is somebody who is prepping to sell their business in the next 24 months, The risk management is not for them. Training is not for them, because some of them, the loss in EBITDA dollars at a multiple, them investing $200,000 of EBITDA dollars, if their business would trade at a 10x multiple, could cost them $2 million in sale price. So if what they're trying to do for that moment is just clean out the fat and kind of show the strength of the business on a balance sheet, then what they're trying to accomplish is also different. And not that anything is right or wrong, but you as an agent asking those questions lets the insured know that there's how I handle my insurance depends on what I'm trying to accomplish as a company. Some people want pricing. I've had clients tell me, listen, we've had some workers' comp losses, and what I want more than anything is for every team member to go home to their families without being hurt. And I'm willing to make that investment. And if there's a way that financially it could help my mod and help me subsidize the cost and still do what's right for the employees, I want to do it. But spending the time to understand and allowing the client to know that you're an agent that could support fulfilling what his specific needs are is tremendous. It's a great way to differentiate.
And I'll tell you what, man, there are two non-negotiables in my agency for producers. Actually, there's more than two, but there's two main ones when it comes to their role interfacing with the client. They are required to go to every audit, and they're required to go to every loss control visit. If you're a new producer that's out there and you don't know these terms, the reason I know to look for this stuff is because I went to all of those meetings and I picked up on what the loss control people were looking for before they ever came out, so that when I went in and advised them and wanted to do my quick spin around the production floor, I knew to look at the fire exit and the emergency exits to make sure they were lit, that they were not obstructed, that that the sign was lit up, that there were emergency lights on top. I knew to make sure that there weren't cords and hoses on the floor from electrical equipment and air powered equipment. So that I could easily suggest, why wouldn't we put this on retractable hose reels above our head so that when it's not in use, it's not a trip hazard? Those aren't things that I came out of the womb knowing, people. I had to go and invest time, and I spent the time to learn these things. Just like the audit. Look, it took me 3 times to get through accounting in college, not because I'm not smart enough. I just really didn't put my best effort forward. And it was not something that excited me. But I also know that for my average business owner that I work with, that an insurance audit is not a fun time for them either. So even if I didn't know everything that I needed to know, I could get a checklist of the stuff they needed. I could make sure that it was complete, and I could show up, if for nothing else, moral support, because I knew my competition wasn't doing that. And if I was there and they weren't, I was always going to have a leg up on them for that reason. Over time, I learned pretty quickly that if I attend every audit and I help my client for every audit, I get all the certificates of their subcontractors and everything else. And it became a really good prospecting tool for me too. It really helps if you want to learn functional knowledge in how to navigate some of this stuff. Loss control visits and audits are huge, because that's where the surprises come after the policies are bound.
Yeah. I'm a sole producer. I have a partner, and what we always do on our team is when an audit comes up, before we provide the information to the auditor, we receive it first, and then we mock up the audit for them. So they know ahead of time what it's going to cost them or what it should. And if something is off versus what the auditor, then it's easier to kind of put it side by side and see where we missed or where they missed and the reason why.
Yeah, we actually do that in real time. We have spreadsheets so that, I tell clients, look, if you want to work with contractors and all you want to do is get an opportunity to talk to them, ask them about certificates and audit. Those are the two places they're going to get pissed the quickest. They're either not getting their certs fast enough and getting paid, or the insurance company screwed them in an audit. Here's the thing. Audit should never be a surprise. Once you have a policy bound in a deck page, you know what your exposure is, you know what your rate is. Plug it into an Excel spreadsheet. If the workers' comp is on pay-as-you-go, pull the reports from the workers' comp carrier, plug the payrolls into your spreadsheet, and you can show them in real time. Here's how much insurance premium you projected. Here's how much you've used. Here's how much you have left. And if you get 3 months in and they're at 80% of what they projected for the year, you have the conversation about, hey, do we need to go ahead and up the installment so you're paying into this now? Or do you want to just go ahead and sandbag, keep the money in your own account, keep it in the business, knowing you're going to have a check? It's not that they're
Right.
upset about the audit. It's upset that they were surprised about the audit because nobody prepared them that this was going to happen.
Absolutely. We've the audit is nobody likes surprises, and especially in a market like this, Florida's been very hard with a lot of increases. We picked up business last minute via AOR out of pure spite that an insured feels towards their agent about them coming in last minute with what's going on. We've called clients 6 months into a policy just because we've seen other renewals and be like, hey, just so you know, we're nowhere near there. But XYZ company is giving us really strong increases on the auto. You're paying X, you should probably expect about this much. And on your umbrella, you're paying X amount of dollars and you should expect 43% increase on the umbrella line. One, because of rate, and two, because of the increase in the underlying. So guess what happens when renewal time comes? There is no surprise. There's no reason for them to be unhappy because they knew that we were well aware of what was happening in real time. And instead, they saw that time period that they knew as a time period that they were getting away with paying lower rates, as opposed to paying a rate, and that is the insurance, and then bam, your insurance comes up in 2 weeks, your insurance policies are up $280,000. And that makes a lot of people very unhappy, especially if your agent is involved in the business. Nobody should know better than him that rates, or her, better than him or her, that rates have increased and what the effect is to them. They're the one, it's our job as producers and as an agency to notify our clients as to what is coming down the pipeline for them. We have to.
And the thing is, it goes back to something we already talked about. You have to have an uncomfortable conversation. Like, this is not something that's always the easiest thing to talk about, but if you're going to have a massive increase, you need to eat the frog, I mean, and there's positioning around it too, right? Like, if I'm going and I've got a property account that is going to have an increase, we already know it's going to go up. I'm never going to go present what my first renewal option is, or the recommended option. I'm always going to show them the most expensive quote that we got back first. Then I'm going to show them the cheapest, and then I'm going to show them what I recommend. And I'm going to talk about, this one's way too expensive. It doesn't make sense. We can do better, but I wanted to get the worst case scenario out of the way. Here's one that's a lot cheaper, but these are the reasons why it's cheaper. And I don't recommend this because based on the losses that you've had, or what we're seeing right now, that it's probably ultimately going to cost you X number of dollars more. Right here's where we think you need to be. We understand that it's a pretty significant increase from last year, but it does bear what the market is trending right now. And I feel comfortable telling you this is the best option for you to have. If you can get the worst out of the way, most of the time, it makes it a whole lot easier to talk about what you're recommending, because if they're going to throw something at you, it's going to be when you talk about the worst case scenario. So I just think there's an art to presenting this stuff too, instead of just going in, because a lot of times I don't feel like producers, I'm not sure what you do, but I can tell you what we do. We always give them a marketing list. I want to make sure that my client knows these are the places we've gone. This is the feedback we've gotten. Here's where we've ended up, because most of the time, unless there's a reason, we're not going to shop an account every single year. It's usually every third year we're going to go to market to validate market pricing, just because the size of the account, it's too cumbersome to make all the switches unless you absolutely have to. And the reality is, if we're doing our job right, we're leveraging that carrier for resources, and we want to have them be able to get a return on their investment if they've done what they said they were going to do and the pricing checks out. I want some loyalty there. We're going to need that, because God forbid things turn south and we need claims handled the right way. We need a little bit of goodwill built up. And that's a delicate part of the relationship to balance, because you don't want your client thinking you're not going out to get them the best rate every single year. But some of this comes back to underwriting community reputation too. If you're taking the same account out to market year after year after year, and you're hitting 10 or 15 carriers, 9 or 14 of them lose. Only one of them gets the business. And there's going to come a time where you're going to need one of those other markets, and they're not even going to be willing to crack the submission and look at it because they've seen it 10 years in a row. It got in decline.
Right. So I don't know if this is the right approach, but it is our approach. When it comes time for renewal, yeah, we could blast it out to the market, but we as agents, you kind of know the 3, 4, or 5 possible homes. If you were going to lose this account to one account, you know what those 3 or 4 places are. And so what we do, and I think it's really fair all around, is we send out the application, we send out the submission, we ask them to review it before logging it in, before issuing a declination or anything. And we also provide current pricing, but also target pricing and what the ask is in terms of service, because it makes it very easy for the underwriter to get a file and they say, okay, I see what this is, I like this. And then they'll look, okay, current is paying this much. And for us to earn it, oh, we'd have to pick up all their E&S property and put it on a standard mark. Okay, and then how much value? 50, okay, 50 million is too much. For coastal, we're not gonna, we're not gonna outlay 50 million worth of exposure for a $500,000 premium account. We're out on this one. And they can make those decisions. What I want to avoid is for them to go down the road and asking for all the information. We're providing it. The insurance company is, the client is also cooperating and getting us the information we need. And we're having loss controls. And then we receive the quote, and guess what? Your expiring was 400 grand. The renewal is 440. And this option we have here is for 700 grand. What the hell did we just do? So we rather, and that happened to me way too, as you can tell, it happened to me way too many times in the past, that now we knock that out from the get-go. If we know, if we can tell them up front that the ask is going to be to do all the casualty and to do the property under $1 rate, 10,000 per million, they need to know that up ahead of time, and we don't fall into that situation. And it gives them the opportunity to say, nope, we can't compete. We're just not there yet. We can't take that much exposure. Thank you. And they back away. If there's a problem with the renewal, we'll come back to them and we'll restart the conversation. But if there isn't, then we kind of stay where we are, because we don't want them to do the work and then obviously not get the order. But what happens here is 3 years down the line, where Travelers, who was on the account for so many years, just got a huge rate increase. One of the lines looks way off. We can call back the other carrier and say, listen, we sent this to you 3 times and you couldn't compete because of price. But this just happened and their rating has changed to this level. And we've spoken to them about it and they can't come back in the other direction. This opens the opportunity for you. And many of them, it makes it so much easier to swallow when they know it's been sent to them, they know they've had the opportunity, and now they have a realistic game plan as to how they could potentially write the business and earn the business without wasting their time. And I think that's something for all, maybe not so much the producers, but for marketing managers to really consider in being proactive and sort of visualizing what the possible solution could be that is worthy of a change and sharing that with the market versus just blasting out apps and a supplemental and asking for a quote.
Yeah, and I think one of the nuances that makes what I do a little bit different than most is because the majority of what we write is very workers' comp heavy. It's usually a troubled account. Okay, so if you look at it from that perspective and being in Florida, what am I really gaining by going from one market to the next? The pricing is going to be the same. I might get a little bit better dividend from one over the other, but if I've asked a carrier to come in and invest a reasonable chunk of loss control resources in year number 1, am I really doing my client any favors by going out and saying, well, let's go to these 3 markets too. Now, mind you, the bottom line price is probably going to be the same, assuming we're not on consent to rate or anything like that. But I may be able to get you a better dividend on the back end. I may be able to get you a better guaranteed dividend on the front end, whatever it is. The reality is, client, we represent that at the point of sale. We're going to be asking this carrier to take a bet on you. We're going to ask them to put resources in place. It doesn't make sense for us to go out, next year, the year after, the year after. If I wrote property heavy accounts, I would probably market them every single year for that reason. The property market is so dynamic, and even auto and umbrella at this point, man. But with us leading with workers' comp and Florida having state administered pricing, our real focus is auditing the mod, doing the things necessary to drop the mod down and ultimately maximize the dividend, or get them on a paid or an incurred loss retro, if that makes sense, so that they're buying
Right.
in with a much lower amount. You know what I mean? So it's more about program structure. And as long as we're using the carriers that can do that, we don't have a lot of business that bounces from carrier to carrier, even at the 3-year mark, because the incumbent always wants to make sure they're doing what they need to do to keep the account. And the reality is, in most cases, those first 2 or 3 years are when that carrier is going to make the most on that account. When the mod starts to drop, their premium levels are going to drop and they're not going to be as profitable. So at that point, it might make more sense to have people who want to be a little more aggressive and didn't realize what it was like in the early couple of years when that thing was a $500,000 and now it's sitting at 300,000.
No, you're absolutely right. What the carrier does beyond what shows on a deck page on a policy, it's very important. And then us as agents, we kind of already see which carriers are the ones willing to step out and sort of put their neck on the line and helping the insured versus just trying to keep their loss control and risk management expenses down.
100%. Well, listen, man, we're coming up right at about 4 o'clock. We got a little bit of a late start due to my own technical difficulties, no fault of your own, but I feel like we could go for days, man. I definitely want to have you come back and have us chat further. But before I let you go, I got to give a shout out to Alejandro Bello. He's the one who nominated you to come on, and he and I have interacted for a number of years. I know that he's a big fan of you personally and what y'all are doing down there, and I'm glad to see that he has a good home that he's going to be able to learn the right way to do things.
Yeah, he just has this really special energy about him. He's got a good heart. He means well. He's young. We've never hired a producer at his age. We've never hired a producer not yet out of college, and he's doing both. But I wanted to get his feet wet as soon as possible because I know he has what it takes. He's got a lot to learn, and so when he's setting these appointments, myself and Miriam and the other producers here in the office, we're coming in with him to make sure we give the client the experience and the service and value they need. But simultaneously, he's learning and he's getting all the commission for it. So I'm proud of it. We have a couple other producers coming on towards the end of this year, and then that's going to keep us busy for the next 24 months or so before we kind of open the doors again. And
I hear you, man.
It's a lot of work.
I hear you. It is, but it's fun, man. I've gotten to a point in my own career, and I mean this with all sincerity. I get far more joy out of watching somebody on my team win that I've helped than any deal that I'm going to close myself. Not that I don't still get the adrenaline rush and still enjoy closing business. It just hits different. And I mean, part of that is the same thing. I grew up playing sports. I played baseball through college. That first time that your kid gets a hit in Little League, it's like a bigger deal than if you'd have won the College World Series with a walk-off. You know what I mean? And it's not that I treat my producers like my children. I don't mean that in any way. I just mean, for me, at this stage in my career, knowing that I can teach, develop, and ultimately help people succeed in a way that will change their family tree for generations to come is far more rewarding than anything I could do for myself.
Yeah, listen, it's rewarding for me. I would say 40%, but the other 60% is my way of giving back, because what you're suggesting and what you are doing for others have done for me. And that's within this office with my mentor and the other producers here. And it's also with clients who took chances on me where they kind of knew the business was a little bit above my pay grade. And I was able to then fill in the shoes that they allowed me to put on and come through for them. And so we all got to give back. It's incredibly rewarding to do for others the same way they've done for us. You didn't get to where you are. I didn't get to where I am without people investing in us and trusting us to make sure we came through with the win.
Oh, 100%. And it's funny now because I've got accounts that I've had for almost all 18 years I've been in the business. And we'll laugh about the first time that I walked in and called on them and met them. And it's just like, we knew you had potential, but we weren't real sure, right out of the box. And it's in a good agency and had a good name behind me, which is similar, to what Alejandro is dealing with now. As long as he's got the grit and hustle, man, there's no doubt that guy's going to be successful. I know you guys are going to back him up, but at the same time, I feel like, from what I at least can see from afar, he's doing the things he needs to do to get in front of people and ultimately win down the road.
Absolutely. David, I really appreciate everything you're doing for yourself and those around you. Thank you so much for spending some time with me on the horn
100%,
and
man.
make sure we get it out to others.
Absolutely, man. I appreciate you coming on. Guys, if you want to reach out to Ryan, how can I would say connect with him on LinkedIn. He's extremely active on LinkedIn. But is there another way that you would want people to reach out?
LinkedIn is fine, or call directly myself, 646-523-7272.
There you go,
Thank you,
people.
guys.
He has been Ryan Garzon with Keys Coverage down in Southeast Florida. Been a pleasure talking with him. Appreciate your time, brother. I know you got to run. I'll talk to you soon, okay? Take care.
Thank you.